So what are the tax consequences of living in one state, but working and earning money in another state? Are you taxed at both states? Hi, my name is Alex and I'm a certified public accountant. If you find this video useful, please check out my other videos on tax planning and personal finance. So the topic of living in one state, but earning wages in another state follows either the general rule or the exception to the general rule. So let's start with the general rule. The general rule states that you typically owe taxes in the state where you earned those wages. So in other words, not the state where you live, but the state where the work was actually performed. Now, you still have to file taxes in both the state you worked and the state you lived in. In such case, you would file a non-resident tax return. But the good news is your home state will typically give you a credit offsetting the taxes that you paid in your work state. So this means you aren't double taxed. Now, the exception to the general rule is if these two states have a reciprocity agreement between each other. Now, this typically happens between neighboring states who have established a good relationship and they want to encourage work between each state. So for instance, the states of Virginia and Maryland have a reciprocity agreement between the two. Now, this means that if you live in one state and work in the other, you actually don't owe taxes in the state that you worked and earned the wages. You only owe taxes to your home state. Now, also, if the wages and withholdings were filed correctly, you don't actually have to file a non-resident tax return in the state that you worked. You only have to file a tax return in your home state. This situation in which neighboring states have reciprocity agreements between each other is usually favorable for the workers. So let's quickly recap. The general rule states that if you live in one state and work in another, and there's no reciprocity agreement, then you owe taxes where the work was performed, not where you live. Generally speaking, you'll file a non-resident tax return in that state where the work was performed, and then you'll file a resident tax return in the state where you reside, and they'll generally give you a credit for the taxes that you paid to the other state. But there is an exception, and that's if the two states have a reciprocity agreement between each other. If there is a reciprocity agreement between the two, you can live in one state, work in the other, but you only owe taxes in the state where you live. So the wages earned in another state are taxed by your home state only. If they were withheld incorrectly, you can file a non-resident tax return to that work state, but you would generally get the full refund so that it can be applied to your applicable tax rates of your home state. So there we have it. That's both the general rule and the exception to living in one state and working in the other. Thanks for watching. I hope you found this helpful, and please subscribe for more videos.